Ladies and gentlemen, my name is Warwick Grigor. I'm going to tell you about a junior company capitalised about $40 million, listed on the ASX in Australia. It's got two very different projects, but both of them have considerable cash flow merit. On the one hand, we have a very high-grade gold project in Colombia. High grade meaning in the order of 30 grams per tonne in situ. We're actually producing gold now. We're just going through the commissioning phase and we're about to hit the straps the month of October. We expect to probably produce about $500,000 worth of gold. Over the following 6 months, we will lift it from 15 tonnes per day to 50 tonnes per day, at which point we'll be making substantial profits. The phosphate in Brazil, that's a completely different project. It's a cash flow project more than an exciting gold project, but very technically simple. Mine life at least 18 years, probably twice that, and very strong cash flow. Unusual to see phosphate and gold in one company. That's for historical reasons, and at some point we will separate them as specialist companies in each product.
Have a look. It's a pretty in their valley.
So the high-grade gold in Colombia, as I said, 30 grams per tonne in situ. Naturally, it will be diluted on mining, so don't expect to see us reporting 30 grams recovered grade. It will be something less than that. Very low capex though. When we purchased the project, we already had a 30 tonne per day plant. We've expanded that to 50 tonnes per day, and now we just have to get that ore out to feed that mill.
How's it going?
The exploration potential is very important for this project. We haven't done a lot of drilling yet. We've opened up the mine, we are producing, but we've got 7 kilometres of veins that are yet to be tested. Anything could be in those veins, but we look at the analogy with Grigor gold mine. That was owned by Continental Gold, listed in Canada. 10 years ago it was where we are today. They had a 30 tonne per day pilot plant and they started drilling. Over the subsequent 5, 6, 7 years, they got up to 10 million ounces of gold. They started to develop a 250,000 ounce per annum gold mine, and Zijin Mining came along and made a takeover bid for $1.4 billion. Now, we're only capitalised at $40 million. If, in fact, we are on the same roadmap set for us by Warwick, we could easily have a value of $1 to $2 billion 5 years down the track. That's our objective. In the meantime, we aim to be financing the drilling to prove a resource like that by doing gold production. The important thing is that this is not exploration drilling, it's brownfields. We know where the ore bodies, we know where the fault zones are, the strike length. We don't have to spend a lot of money on locating targets, we know where they are. The phosphate, we've got 100 million tonnes of phosphate reserves and resources, but we're only looking at the soft saprolite ore to begin with. That's about 5 million tonnes of 8.8%. Through selective mining, getting the correct cut-off grades, we'll be selling a product of 12% phosphate. We've already got a treatment plant. The feasibility study talked about a $25 million capex, but we've done a lot smarter than that. We've found a processing facility which was being used for gypsum with one of the local companies. We've taken that and converted it. It cost us about $1 million. Our total capex by the time we get into production will be in the order of $5 million, as opposed to $25 million if we went through a brand new plant. The other thing is, this is part of an industrial complex for a company that's been operating 100 years. We will be enmeshed in the local business community, only 6 kilometres from a sizable 10,000 person town, and that's far more attractive than setting up a brand new greenfields operation 50 miles out of town. We'd be the we'd be the Australian foreigner, but with the existing industrial facility, we'll just be part of the local team. We've had bank finance offers of $4 million, which would actually cover all of our capital costs. But the bank has said, we'll put half of that up for the first 100,000 tonne capacity, which we have now, and when you want to go to 300,000 tonnes per annum, we'll make the rest of the money available then. So the plant is supposed to have a capacity of 100,000 tonnes per annum, but a recent audit has suggested we could actually be doing 130 to 150,000 tonnes per annum. Importantly with phosphate, it's an essential product for farming. We all know that, for food security. But our market is within 300 kilometres of the plant. There are many phosphate deposits out around the world. Australia's got big phosphate deposits, but the trouble is you have to put it on a truck, a train and a ship, and the logistics kill you. Our ability to sell it within a 300 kilometre radius provides us with an enormous cost advantage. The other thing is the phosphate that comes into the southern Brazil comes from Morocco. We will be replacing imports, and the government and the people would be very proud to have a local operation. That is good, but that's bad. Here we go. Right. So, both of these commodities, gold and phosphate, are benefiting from very high prices. Gold, you should all know about that. Phosphate, fertilisers, the Ukraine war has constrained supply, but at the same time, India is soaking up every bit of fertiliser they can get. There's plenty of hungry mouths in India that want to be fed, and you need fertilisers to improve productivity of crop production. Right place, right time. There we are in Colombia. The Santa Barbara project is ours. That's at an altitude of only about 200 metres. No high altitude problems. It's in an economically recessed, near coastal area. Good place to be. When we purchased the project, it had already bulk tested 500 tonnes of ore, recovered 20 grams per tonne. Now, as a testing operation, you can imagine they're trying to maximise the grade. Normal production, commercial production, the grade will be somewhere between 10 and 20 grams per tonne. After dilution, we need to get a few months of consistent operations to know exactly what grade we're looking at, but it'll be in that range. As I said, the capacity of the plant is 50 tonnes per day. It's not a big plant, but at 10,000 ounces per annum production at this gold price, cash costs of maybe $1,000 an ounce, it'll make a lot of money. These sort of gold systems, if you look at Grigor, Aguia and others, they can easily go to 1,000 kilometres of depth, 1,000 metres of depth. So we have an exploration target of 2 to 4 million tonnes at 15 to 30 grams, which is 2 to 4 million ounces. And if we can confirm that, well, we'll all be very pleased, shareholders particularly. So since we purchased the project, that gives you a bit of a track record over the last 8 months. First gold to prove that we could produce gold was in January. We then had a drought for about 3 months, which constrained the treatment plant. So come May, getting back into full-scale production after the drought. We had the agitator tanks we've lifted from 3 to 10. Crushing capacity has been expanded. Various items of capital expenditure at very modest prices. One of the things we've had to do is improve the workforce. To begin with, we drew from the local labour, but we've had to go beyond that and get experienced mining crews from other operating gold mines. We've also had to replace the mine manager the mill manager, with much more experienced, more productive operators. We've spent the last 3 months knocking that into shape, and October is the month where the benefits of the changes will start to flow through to us. And we've started diamond drilling. On the one hand, we want a JORC resource, which we don't have yet, but the real importance of the recent drilling is to enable us to begin planning to open up the second adit, double the faces we've got, and more rapidly get to that 50 tonnes per day capacity. They're typical channel sampling grades: 33 grams, 19 grams, 16. That is very good evidence. We're not just relying on drill holes to tell us we've got high grades. We've actually got the underground sampling. That's very valuable information and confirms that we should have a good future. There's a schematic of how we are developing the underground mine. You've got a series of stopes, 5 or 10 metre sub-level raises to produce the ore. There we see the drilling relative to the underground workings. More grades, they're the drill results. As I said, narrow vein, you need to dilute for mining, but you still come up with a very profitable scenario. There we have a few photographs, the ore carts. They're electric rails at the moment, about 2.5 tonnes in each of those. There's your entrance, and there's a mining face. We also have another project called Aguia, which could actually dwarf the potential of Santa Barbara. Aguia is high-grade copper and gold. 3% copper is what we're looking for, 5 grams gold. You can see selectively there's much better grades there, but let's round them down to what would be achievable on a production operation. We've only got 34 drill holes, but we do have an adit in it. You'd be mining 2 to 5 metre widths. This is very similar to a project called the Grigor in Australia, which took a $10 million company to a $2 billion size. Very profitable. We think we've got something in that order, and we will move on. We'll either joint venture this because of the money involved, or if the Santa Barbara produces a lot of cash flow early, we can manage to finance it ourselves. So then we come to the Brazil situation again. Chemical-free processing. It's very simple, free dig, no drill and blast, mining the top 10 or 15 metres of saprolite ore. It then is put through screens, a rotary kiln, which would reduce the moisture content from 18% to 8%. A small proportion of the product will go through hammer mills, reducing the size to 2 millimetres, and that's what the farmers need to put in their equipment. That is, we're expecting to get our final operating licence Q1 next year, and that will hopefully be in time to start production in March, April, and first sales of phosphate in May, June, July, the winter selling season. As I said, very low technical risk, $65 a tonne estimated costs, selling price $120. If you do your numbers at our level of production startup, we'll be making $15 to $20 million cash profit on an outlay of $4 or $5 million. And we'll triple that capacity within 3 years. So, not exciting, but very, very profitable. We've got a number of other ore bodies that we will move on to. We're part way through drilling them out and getting JORC resources, but we've got a very good long life supply available to us. I can read German. Yeah, that looks better. So eventually, it's unusual to have gold and phosphate in one company. The intention is we get the phosphate operating, making money, establish value, and we'll spin it off into a second company, and Aguia itself will revert to being high-grade gold and copper company. The presentation's online. if you go to our website, there's a snapshot of some of the economics. At $200 per tonne EBITDA over an 18-year life would be $400 to $500 million pre-tax cash flow, similar figure. That's a no-brainer. It's a cash cow. That's a picture of the rotary kiln we used to dry. That's the one we'll actually be using. That's not a picture of some remote plant. That's ours that we are leasing for 20 years. So there's the board of management. I'm the executive chairman. I've had 40 years of experience. I was previously the executive chairman of Canaccord Genuity. I set that up in Australia. I've been a specialist analyst, particularly in gold, since the early 80s. And I'm too young to retire, so I'm having a bash at this one. William Howe is our CEO, MD. He's an experienced underground miner coming from South Africa and Australia. He actually lives in Colombia, which is very important for logistics. Likewise in Brazil, Tim Hosking is our country manager. He's an Australian, but fluent at Portuguese, married a local, and he's a very good businessman, a good man to have on the ground. So, I think I'm out of time, but that's a summary of why this should be of interest to you. It's got the combination of conservative long life cash flow project along with a very exciting gold project that could be both very profitable and much, much larger than we see today. So thanks for listening, ladies and gentlemen. If you want to know any more, my booth is just over there and I can go through it in more detail with you. Thank you.